Hi guys, good morning. I know that by now you already received the memo from our school that we will not be having classes by Monday next week until Wednesday. So it really means that we will not be meeting each other next week for business combination and government accounting. And we haven't discussed much for the two subjects. And the week after next would be our semifinal already. And yeah, so that's why as much as I want you to enjoy your long vacation, I don't want to spoil your long vacation, but I opted to prepare this instructional video to continue our discussion because definitely the content of this video will be part of our um, semifinal. So I'm really encouraging everyone to check on this video so that you'd be able to answer our semifinal exam. Alright? So let's start the ball rolling. So if I'm not mistaken, we ended our discussion for business combination, page 118. That's for illustration number 4. Now, let's continue for illustration number 5. Again, page 18, chapter 3, applications of the direct valuation method. ABC Company and XYZ Incorporated decided to combine and set up a new entity we call Alphabets Corporation. The individual records of the combining constituents show the following. So we have the records of ABC Company and XYZ Incorporated. All are net assets at fair values and also average annual earnings. Additional information, Alphabets Corporation issues 10% preference shares with par value per share of 100 for the net asset contributions of the combining constituents, and ordinary shares with par value per share of 50 for the excess of the total contributions. So that is net asset contribution plus goodwill over net asset contribution. We have the normal rate of return at 10% of net assets. Excess earnings will be capitalized at 20%. So we have the following requirements. Compute for the following: first, goodwill, total contributions of ABC Company and XYZ Incorporated. Then the ratio of total shares with regards to preference and ordinary based to ABC Company and XYZ Incorporated. So first, let's compute for the goodwill. So we have the data for average annual earnings both for ABC Company and XYZ. So let's copy that one. And it was mentioned that the normal normal earnings on assets. So we have 40,000 for ABC Company and 60,000 for XYZ Incorporated. So where did we get that that amount? So the normal rate of return is 10% of net assets. So we have a net assets of ABC Company of 400,000 I mean. So we multiply it to the normal rate of return of 10%. That's why we got the normal earnings, the net assets of 40,000 for ABC Company. And also, for XYZ Incorporated, the net assets is 600,000 multiplied by the 10% normal rate of return of 10%. So that's why we got 60,000. So average annual earnings less the normal earnings and net assets. So we have the difference, excess earnings of 40,000 and 60,000 respectively. And we have the excess earnings will be capitalized. It was mentioned here that the excess earnings will be capitalized at 20%. So that's why we have to divide it by the capitalization rate. So 40,000 divided by 20%, we got 200,000, and 60,000 divided by 20%, we got 300,000. So basically, the goodwill is a total for 500, 200 for ABC Company, and 300 for XYZ Incorporated. So that's it. That's how we computed for the goodwill as the first requirement. Well, I know you won't be able to raise any question for me right now, but if in case you have, just drop it in our GC in case you have any questions with regards to the discussion. But it is clearly stated here, a detailed discussion or a detailed presentation based on the solution. I just pitch in those how we got those information. So that's how we got for the goodwill. Next requirement, the total contributions of ABC Company and XYZ Incorporated. So basically, we already computed the goodwill. There's already a goodwill from first requirement, and there is also a fair value of net assets given in the problem. So if we take a look back on how we got goodwill, we got it from the difference between the total consideration given less the fair value of the net assets. So we do have already the fair value of net assets in the goodwill. So that's why we need to do the squeeze method. So that's why goodwill is 200 for ABC. The fair value of net assets is 400. So we will add it back to get the total contribution for ABC, which is 600,000. Then for XYZ, 300 goodwill and the fair value of net assets, which is 600, add back as well. That's why we got 900,000. So the total contribution of ABC Company and XYZ Incorporated is 1.5 million. So that's it. That's how we computed the total contribution for ABC Company and XYZ individually and as a group. Now, let's compute for the last requirement, the ratio of the total shares, preference, and ordinary issued to ABC Company and XYZ Incorporated. So, let's take a look at the solution. So, we have the column for ABC, XYZ, and for the total. So, it was mentioned that the net assets contribution based on the given provided, we do have 400 and 600 respectively. And it was mentioned that the par value per share of the preference shares is 100 pesos. So that is with regards to Alphabet Corporation already, because they decided to combine. So that would be our divisor. So 100 pesos. So basically, we issued, or ABC Company and XYZ Incorporated issued preference shares 4,000 and 6,000 respectively. So for a total of 10,000 preference shares. Then the total contribution, let's take a look at the lowest part of the solution. The lower part, I mean. So total contribution is 600, 900. That's what we computed previously in requirement B. The net asset contribution 400 and 600 respectively. So that's why we have the excess of total contribution, and that form part of the goodwill. So basically, the excess of the total contribution will be, so diba, if we will be issuing if a subscriber will subscribe for a corporation, then na-excess sa par, na-excess, we will match the fair value and the par value. And if the fair value is 100 pesos and the par value is 50 pesos only, so basically if whatever shares does the subscriber subscribe, for example preference shares, the amount that will go to preference share capital is equivalent to the shares multiplied by the par value per share, so basically 50, and the difference between the par value and the fair value, which is 50, that will go to the share premium. So for this illustration, I just illustrated that one because it is somehow of similar, because for this one, since we do have this, because it was mentioned here that Alphabet Corporation issues 10% preference shares with par value per share of 100 for the net assets contribution of the combining constituents and ordinary shares. It was mentioned, ordinary shares with par value per share of 50 for the excess of the total contribution. So since the total contribution for ABC and XYZ is 600 and 900,000 respectively, there is an excess of 200 and 300 respectively. That's in thousand. So it was mentioned that will form part of the ordinary share, because the net asset contribution will form part for the preference shares. That's why sa taas sa requirement C atong gi-divide ang net asset contribution with regards the par value of the preference shares. So we got the preference shares issued by both company and as a whole as well. So that's why for the excess of the total contribution, we divided it by 50 pesos for the par value per share for ordinary shares. So 200 divided by 50, we got 4,000. 300,000 divided by 50, we got 6,000. So still a total of 10,000 ordinary shares. So same with the preference shares. So total preference shares and ordinary shares issues is 8,000, while for ABC and for XYZ, that's 12,000. So a total of 20. So basically, that's 8,000 divided by 20. That's 40%, because it was mentioned the ratio of total shares. We are asked for the ratio of shares issued. So for ABC, the company ABC issued 40%, the total issuance for preference shares and ordinary shares, while XYZ issued 60% shares. Alright, so that's it for illustration number 5, applications of the direct valuation method. I will end the video for this part para dili kay taas and masend nako sa GC nato for you to check the video, and I will send another video for the succeeding topics. Okay?